So it's a little bit confusing, but this Fruitful will be where we have all the training. If I'm doing live day trading, it's in this one. I have this channel just if you guys want to talk about stocks, but nobody really uses it. But yeah, these are the main ones that we use. And then also this trading resources is probably the most important. You know, where I'll post all my plays, options plays, in the swing trades. But what I was telling Michelle and some of these other guys is that like it's not necessarily my priority to get everybody to be a day trader, because day trading is not for everybody. I mean, really, day trading should be looked at as like a is like a side hustle almost. It's more of like a job. It's like a job. It's like, are you going to show up to work today and see if you can make a little bit of money in the market today? That's really what it is. The most important thing, but the reason why I have you guys watch me day trade and get you guys to understand the concepts is because it's the concepts that's most important that you can apply, that translates to everything else. Because like I keep repeating myself, but it's like it's being trained at the highest level. You know, if you're being trained at the most elite level, it's going to make everything else easier. So if you understand day trading, everything else will be easier. Swing trading, long-term investing, just knowing, you know, not being confused when the market crashes, like, because you know this shit's going to happen. The same way you see it happen, you know, as you're day trading, you see the stocks crash in a couple minutes. It might only be a few dollars, but then on the long term, when shit crashes, you know, you get a big crash, you know, you're not going to just be sitting there wondering why this is happening. You actually might be setting yourself up in a position where you benefit from the crash because you saw it coming and you bought some puts. So, you know, that's kind of what, and that's why everything translates. Everything translates. The day trading translates to the swing trading. It translates to the long-term investing. It's like riding a bike. Everything is the same. It's just micro to the macro scale. So when
exactly. I got kind of freaked out on Monday with the drop in the EV stocks.
Yeah.
And got out of my position in the deal. After I did it, I was like, damn it, why did I do that?
Yeah.
Because I wasn't in the right mentality of putting more money in when I saw that drop.
Exactly.
Yeah.
And then secondly, to add to that, by understanding RSI, moving average, okay, let's say your company does, like Neo does just knife, right? Okay, but then and then you sell, like you just kind of panic sell, right? You just see it's down a lot and you kind of panic sell. Well, then now you can see it's recovered, right? So to a certain extent. So then also knowing, okay, if I see this trade is going south, am I gonna sell at the bottom? Like, okay, so the RSI goes, you know, on the daily time frame or the minute time frame that I'm looking at goes all the way to 0. Okay, should I sell right here? It's like you could sell here. Okay, sure, but the other option is okay, I know, I understand day trading a little bit. I know that even if the RSI goes super low here, it's going to pump a tiny bit and then I could get out. So then like you might be able to even, okay, so you know, okay, I'm exiting the trade, but the RSI is so low here, I'm just going to wait for the RSI to get up a little bit and then sell, because I know maybe I might get a little bit back. So that's why I'm saying you start to apply everything to everything else. And then also, when it just comes to straight up buying options, this is when the day trading comes into play too. Because let's say I want to buy a call contract. Okay, here, I'll actually see if we can and make a real life example. But let's say I'm trying to buy a call, but the RSI is super hot right now. Okay, so I want to buy I'm not day trading. I want to swing trade this call. I think the company's going to go up, but right now on the minute chart and on the daily chart, the RSI is super hot. So should I enter this call here? The answer is probably not, because even if you want to enter this call, you should just wait for that RSI to get a little bit lower. You're going to get a better entry. Yeah. So it's going to be there because it's overinflated. The entry is going to be there. So if we now try to apply this to real life, let's see, like we could just look up NEO stock.
Who's that? Okay, you were looking at Nicola, right?
I was looking at Nicola, but now this is NEO. Okay. Now I'm looking at NEO, and
yeah,
same thing here. Okay. So the same type of concept. I'm looking at the 1 minute chart on the daily time frame. So this would be day trading. Okay. But I'm not day trading. I'm just trying to figure out, okay, I want to buy a call today, right? So I could be still buying a call 2 weeks out. If we go to the daily chart on NEO, okay, and we're using that 20 MA, this purple line, we can see, okay, I mean, based off of our information that I teach you, what do we say? We like to enter below the moving average, and we like to sell. Yeah. We like to sell when it's above. Okay, so
above, yeah,
exactly. So here we have, if we're looking at the daily time frame and we want to buy a contract a couple weeks out, couple months out, we're not day trading, we're swing trading, but we're still have to wait. Okay, we go to the daily chart. Are we below the moving average? Okay, if the answer is yes, now the second step, this is where the day trading the knowledge of the day trading comes in, is now I'm going to go to the daily chart and wait to buy this call. Exactly what's happening here. Look, RSI got super hot. Okay, so you don't want to buy, even if you're long and you're not day trading, you don't want to buy the call right here, because now if you waited for this, the call is probably 3 or 4% cheaper. So right off the bat, that's why right off the bat, sometimes when you buy options, you might be down right away and then wondering, what the fuck's going on? I literally just bought this and now instantly I'm down 5%. Well, this is probably why, because you weren't now.
I didn't wait.
Exactly. So now you're saying, okay, everything looks good for me to enter a call, but now I'm just gonna wait for shit to cool off for me to enter. And I can be using multiple charts. I can go to the 1 hour chart and say, hey, can I get a good entry on the 1 hour chart? Well, hey, this is looking pretty decent on the 1 hour chart because you are below. But keep in mind, it's downtrending here. We're not uptrending anymore. It's downtrending.
Right.
Downtrending.
Yeah, I heard you talk about that the other day. Like you mentioned like setting up and make sure like that your overall trend is going in the way that you want to trade.
Exactly. So in this situation, you're a little bit uncomfortable buying calls because it is downtrending.
Yeah.
And there's a difference between uptrending and downtrending and how it interacts with the 20 MA. Notice when we uptrend, what do? We gap above the MA, and then quick real reset, dip below, dip above, But now what happens when we downtrend? It's the opposite. Instead of gapping above, we gap below and come back to it. And then we gap below and come back to it.
So now I'm used to looking at like stock charts, right? Like an overall, like a couple of weeks out or a couple of months out, looking at like the MACD.
Yeah.
Right now I see when I look at something like NEO and a bunch of other stocks that I have on my list where they're all starting to trend down. Would I then just kind of stay away from those?
Well, that's just telling you that, hey, if you're going to buy calls here, you're already like, okay, so I talked to this a lot with one of the members in here, Slime Ali, and he was coming into a little bit of trouble because if you don't mind me sharing, bro, a little bit about, do you mind?
Yeah, stand cool.
Okay. So, so if I just show you guys a little bit of the conversation that we were having, right here, he bought an Apple call and he said, my Apple call is significantly down, but I saw people say it's going to bull flag. So I have a 125 call for next Friday. Okay. But then I sent him this screenshot and said, well, The reason you're down is because it's above the MA, and so you already gave yourself a less likely chance for it to cash. And so the reason why I'm teaching you all these things is because each little box that we can check, so think of like a trade being 50-50, okay? A trade might be 50, or a trade might be 50-50, but then if you start checking some boxes, honestly, a blind trade, if we're just talking about a straight up blind trade, a shot in the dark, what most beginner investors do, they just, maybe we'll look at a straight line chart, nothing else, and then just choose to buy. That probably has even less than a 50% chance of being it's probably like a 30% chance. Okay. But now when we start to give ourselves some of these other things to check off on our checklist, each thing you start to check off on your checklist, you start to give yourself a little bit more percent chance of it cashing. Okay. So now that I'm giving you guys multiple things to use for your checklist, okay, not only the 20-day moving average, but you could even use the 50-day moving average. And then not only using, the RSI 14, but you're also using the RSI 2. So if everything is telling you it's an entry, now you're giving yourself like a 75% chance of, so it's like when we're entering calls and Apple is above the moving average, what are we hoping now for? All you're hoping on is either a bull run or news. Right. You're relying on, like, it's almost like you're wishing on a star. Versus, well, shit, why don't you just, if you a week ago or 2 weeks ago, you could have bought the calls on Apple when it was below the 20 and the 50-day moving average. So that's when you want to buy calls. And look, I mean, it's easy to see it now, like, in hindsight 2020, of course I would have bought this bottom and this bottom, but it doesn't matter. All of these entries below the MA, you made money in the long term. And so that's why, just in general, when you're looking at the daily chart and you're wondering, hey, when should I invest in a company? It's always got to be below, because it's always, it's easy to get caught up with your psychology. It goes against your psychology, and you wanna enter a stock when it's starting to rally. But you're, in these instances, when you're so far above the MA, you have to be more bearish than bullish, because the golden rule is, here, let's see if I can get my notepad out.
Yeah, I remember I saw, like, in the chat, what was it? That must have been, when was that day? The day that those two crashed, and the Workhorse also crashed.
Yeah.
And I saw that like Ziggy bought the
call.
Workhorse.
Yeah, exactly.
At the end of the day.
Exactly.
And I was like, damn, I wish I would have thought of that.
Yeah, exactly. And it's like the market screws over the majority. Okay, you have to be a wolf in a game of sheeps, right? So it's like when stock prices are going up, everybody wants to buy the stocks, right? But as a wolf, you have to know that this shit's not sustainable. It's going to come down. And in the case with this, you can already see it got 2 red candlesticks and got rejected. It had a top and got rejected. So this is already telling you that it's already had a resistance up here and is starting to come down. So to be bullish here, you're already kind of setting yourself up for, you're giving yourself a less percent chance of winning. And so there's so many opportunities to make money in the market. There's no reason that you should enter anything that looks like this. And just wait, because this shit comes below the MA every couple weeks. So just be patient. You can't just be trying to rush through the shit.
So now when you're looking at your options, like, how do you know, like, what kind of dates you're looking at? Like, what kind of time frames? Okay. Because that's the thing that's, like, really kind of tripping me out.
Yeah. So let me go to Robinhood. Okay, so you never You never want to buy same week expiration unless you're day trading, okay? Because expiration,
Gotcha.
that's what will clap you, okay? And then number two, it's always better to buy in the money versus out the money. Okay, what does that mean? In the money. In the money means my call is already cashing, so I'm buying a call.
It's already profitable, right?
It's essentially it already has. Okay, so
it's already above that.
It already has that, so it already has real value. Whereas these out of the money, there's no real value here yet. It's all speculation. It's all premium. All premium here. This is real value. So just a couple things. Look at this. Okay, so here we have $15, a $15 call. That's almost $2 in the money for 3.
Yeah.
So you're getting $2 in the money. You're paying 3. You're paying an extra $1.30. Okay. Here, out 15 cents out of the money, but you're paying $2.50 premium. Well, this one you're only paying $1.30 premium. Do you guys understand how I'm calculating the premium?
Okay.
So I'm calculating the premium. I'm calculating the premium by subtracting how much it is in the money from the price. Okay. So this is
gotcha.
This is $1.87 in the money. Okay. So this is about, if I do the actual math here, I'll do the actual math. So we have $3.35 subtracted by $1.88. So we're paying $1.47 premium. Okay. But this one we're paying $2.49 plus another 10 cents. We're paying $2.60 premium. So this 15 option already has way more value than the 17. And all you have to spend is an extra 70 bucks to give yourself those $2 extra dollars in the money. So of course it's worth it in this case to buy the in the money call. It's also going to be less volatile. It's also going to be less volatile because this is still going to have value even if GameStop goes down a little bit. Whereas this, if GameStop starts to go down, this is going to get clapped. This is going to lose like 50%, whereas this shit might only lose 20%. Okay.
Okay, but I see like you picked it like December 18th. So is that like you're purposely like going
I didn't specifically choose December 18th. I'm just saying I'm never buying something the week of. So even this one has a week now. I'm not going to buy this shit. I'm going to give myself at least 2 weeks because then you're going to be.
This morning you were talking about sell it before.
You always want to sell it
the week before expiry, right?
Oh yeah. So there's a couple methods, okay? There's a couple strategies to options. Okay? 99% of the time you're not going to want them to expire on you or execute them. Okay? There is a method. Okay, let's say there's a company that I really like and I think the price is going to go up, so I buy a call contract with the intention to fulfill it. Okay? So, for example, if I really liked GameStop, I could then go to like, let's say January 8th. I mean, it's the time thing. Okay, so when I'm looking at the trying to figure out the dates, I'm also gonna go through all of them, and then I pick one strike, and I try to figure out the value if the value is like universal. Okay, so here it is, 249 on December 18th.
Right.
Now when I go to December 24th, it's 275. So that was a 25-cent increase. So next week I should see another 25-cent increase at least. Okay.
Okay.
But shit, this one didn't even have a $17 contract. So let me see. Okay, so that's weird that this doesn't even have a $17 contract. I don't know what's going on there. So, but then we go to January 8th, and we see it's 345. So like here I am buying something that expires on the 18th for $250, but I could give myself a whole nother month and only pay, an extra In this case, if I choose this one on the 8th, I'm paying an extra $100, but it gives you another month. So those are the things that you have to like observe and ask yourself, is this worth it to me? You have to like, you kind of have to do a little bit of your own due diligence and just kind of flip through them and see, is this giving me the right value? Because then look at this shit. You would definitely buy these $15. Look at the difference here. $3.45, but this is only 60 cents more for $2 in the money. This should actually be $2 more, but it's only 60 cents more. So that's why I'm saying is like in the money shit is going to be cash for you, especially if you're buying a longer contract. You want to buy in the money because you're not going to get clapped. You're not going to get that time decay, and you're also not going to get the decay from being out of the money. When you're in the money, the shit stays stable, doesn't crash as much.
Even if you really like something, like I was tossing around the idea of DraftKings, or even what's the other one, LCA, just because like doing a spring expiration date, just because by the time spring comes along, there's a bunch of events between the Super Bowl, the basketball's in full tilt, hockey's in full tilt.
Exactly. And so LCA is like, Lancadia Holdings. The only issue I have with Lancadia Holdings is the CEO is super sketchy. Okay, he's very sketchy.
And aren't they like merging with something else to become?
It's like Golden Nugget Casino.
Yeah, that's what it is.
Golden Nugget Casino. It's gonna become GNUG, and it's Tillman Fertitta's casino. He has this resort casino that he owns. It's not giving you stake in the actual casino. It's giving you stake in his online gambling.
In that online business,
it's just the online business. But in the deal, if you read some of the things in it, because I initially, LCA was on my radar when it was at like $10, $11. I bought some, but I got rid of it because I found out some things that like through the deal, Tillman's Fertitta's debt was going to get paid. Like part of the money was going to his own personal debt. So because he owned the SPAC company. That's how you can get it. So if it was a different company, that shit wouldn't have flied. But because it was his own, he owns LCA. So it's his own SPAC is merging with his own company. So that's why it's a little bit shady. But I mean, shit, I'm not saying you can't make money because you did. But then again, at this case, look what happened last time it got above. So I'm not saying it can't run higher. I'm just, and remember, this moving average is always moving. So just because the moving average is right here, right now, doesn't mean it's falling to 1595. Because as the days go on and it stays above this MA, all this buying and selling that's taken up here is pulling this up. So maybe by the time it crashes to the MA a couple weeks later, the MA might be at $17 or $18 by the time it dips and goes below. But that's why I'm saying you still just have to wait. There's plays every day. There's opportunities to make money every day. So by forcing something when none of the basic analysis is showing you that this is a good decision, well, there's really no point in doing that. I've gotten burned too many times doing that. That's why I just don't even have a taste for it. I won't even entertain.
Gotcha.
I will not even entertain buying a call right now. I'm only gonna buy a call here, and I won't even, and especially when shit pops like this, you got to be careful with the puts too, because sometimes shit just goes parabolic. So, especially if it's a good company you like, it's the safest thing you can do with options is not buy puts, but just do calls and buy calls below the MA and have a stop loss on them, because now you're already giving yourself like way more than 50% chance of hitting. Okay. And if you're doing this with a stop loss and you're hitting more times than you're not, You're going to make money at the end of the day. And that's, you know, the reason why I'm successful, because
so that's a good point. So you talked about the stop loss. So how do you know where you put that stop loss?
Okay. So an option is going to be a little bit different than a stock price, because and also it's a lot easier to swing trade shares than it is to swing trade stock. So keep that in mind. It's much, much easier to be profitable swinging shares than swinging options, because options are so damn volatile. Okay.
Yeah.
And especially with shares. Okay, let's say I'm swing trading Apple. What's the worst thing that happens if you swing trade Apple? It might go down a little bit, but if you hold it for 3 months, you're going to be positive.
Yeah.
So it's like with swing trading the shares, there's virtually no risk, especially if you're doing a good company. So that's why I say trade good companies. Don't be trading these, like, if you're trading, it goes back to those ratios that you're trying to give yourself. Now, if I'm trading, I'm not saying you can't make money or never trade a no-name company, because there's a lot of times those no-name companies blow up, especially SPACs. SPACs is completely different, though, because we're getting in at $10, $11, $12. We're feeling really good, you know, because SPACs can, you know, usually never go lower than $10 until after they go public. But if I'm just, you know, but if I'm swing trading a company, okay, so like here's a company that's an example, like Microvision. This is like a small company that has a lot of bag holders, but it's still like a smaller cap company. It's a little bit of a no name. It used to be a penny, you know, kind of a penny stock. Like this shit is gonna be, this shit still interacts with the MA. Anytime you bought below the MA, you're doing real damn good. You bought below here, you know, you're doing good. So there's opportunities to make money. Any stock you look up is always gonna move like this with the MA. But okay, now I'm trading kind of like a no-name company that doesn't have that much volume. Well, now I'm just giving myself a little bit less. I'm giving myself a little bit less percent chance of it being successful, because, or not necessarily being successful, but you're giving yourself a little bit more risk, because I know if I fuck up with the Apple swing trade and I just hold those shares for 5 months, I'm gonna make money.
Yeah.
But if you fuck up with a swing trade that's a small company like this, well, you might really be screwed, because this shit could drop 50%. Apple's never gonna drop. Apple's never gonna drop 50%. Okay, so, but still with the shares, look at Apple. I mean, this is when we sent signals for the group to buy, when Apple was at was right here starting to come up, right here at 112, 113, 112, 113, right here. It was below the MA. This is when let's see if I can go to swing trades.
Yeah, I don't know if I could do the day trading. That's a lot of
exactly. It's a lot of work, and that's why I sometimes, you know, even though I can day trade, sometimes it doesn't work. It's very hard. It's very hard, and I don't want to like cast a negative spell by saying it's hard, but like day trading's fucking hard, especially when you're day trading Tesla. I mean, that's the hardest. You know, Tesla's the most volatile company, the most crazy company there is to trade. Okay, so if you're if you're day trading Tesla, that's like the hardest. That's like the highest level. Okay, and so that's why, you know, myself, I've been kind of more just now like swing trading and waiting for really good opportunities. Let's see when we can find the Apple.
So for me, when I started with Fruitful, I literally watched for a whole month. And as people on, you know, Twitter or in other groups I was in were mentioning companies, I was just adding them to my watch list and watching them every day. And after you watch them for like a couple of weeks, you start noticing that they all have the same pattern. And aside from like Black Swan events or like news that may come out or whatever Trump may say, like, it's pretty much up and down, like without fail. So then in November, mid-November, is when I decided to jump into options. And I made, you know, $5K in a month. But prior to that, it was like I was just watching and watching and watching. and being patient, which is not easy for me because I'm not a patient person. But like this week, I had a really bad week. I lost almost $1,500. Well, not lost, but like just unrealized losses. But I was off. I was sick. I wasn't paying attention to my phone. But really, if you are just patient and you kind of just keep a list of the stocks you really like right now I'm long on DraftKings. I have 2 calls for March 2021 that I bought in the money back when DraftKings dipped originally, like a week and a half ago. But now it's out of the money because that shit keeps dipping. But I know for a fact that it's around that price range. So I'm just holding. I'm not panicking. But a lot of it for me personally, not knowing what I was doing, I had to watch and just be patient for good buy-in opportunities.
Gotcha. Yeah, I mean, I don't mind, I don't mind waiting. I don't, I sometimes get frustrated because I hear, like the day trading, like crew, like during the day, like coming up with ideas, and it's kind of like there's so much going on, that I do a lot of writing and I'm writing down stuff, and it's kind of hard to pinpoint, like what's going on.
Definitely take your for me, the more noise, the more fuck ups that I make. So I definitely try to tune out what everybody else is doing. And I have a few stocks that I like, stocks that I'm invested in. Like Amwell. Amwell's my baby. I've been with Amwell since it went public. Like I used to trade shares and now I'm in the calls, but
yeah, I like that business. I mean, I have a couple of shares in Teladoc, and I really like that space.
And to add what Ziggy's saying, because she's dropping some gems, is like, even though Amwell is her baby, okay, we still have to know that stocks do this shit. And so if Amwell's up here, she's got to get rid of Amwell, knowing that she can rebuy Amwell here. So you can't get emotionally attached to your stocks.
Yeah, I dumped I had almost $4,000 worth of shares, and I dumped it when it hit $35. And then as soon as I dumped it, it went all the way down to like $22. It was below the offering price, and I waited because it's a slow turtle. And it doesn't do what other tele companies do. So I can't base its movements on how Teladoc moves because Teladoc moves differently. So does Zoom. But I noticed that one tried and true thing it does is as soon as it dips under the 20-day MA, it goes up. Exactly. And then you also have to take in fact, once it dips under the 20-day MA, how long does it stay there? Because certain companies, if you watch, some of them will stay there for 2-3 days. Some of them will stay there for a whole month. Mm-hmm. So you have to figure that out in your observation process in order to know when a good buy-in opportunity is. Because yes, you may buy under the 20-day MA, but then you're stuck losing money for like the next 3 weeks because it takes 3 weeks to get above the 20-day MA. Mm-hmm. And you don't want to be bag holding because then you're stuck possibly missing other opportunities in other stocks that may dip and get you a little bit more. You know what I mean?
Absolutely understood. Yeah.
So that's where the analysis of using other MAs, not just the 20 MA. So like a one that people like to use is the 50 MA. And
yeah,
this is here. I'll send some screenshots to the chat, but this is what Ziggy actually brought to me. Was saying, she asked me what's a golden cross, and I explained to her what a golden cross is. And here, I'll send the screenshot so we can all.
Yeah, I've heard some of these terms.
Okay, I'm gonna send.
Yeah, in fact, I like today. I just printed out the. I saw something that you had posted about the bullish patterns, the bearish patterns, the reversal patterns.
Yeah.
So I printed that out.
Definitely.
So I can like study that.
Definitely, and it's not always gonna look exactly the same. So like, for example, in that scenario, a triple top, okay, a triple top looks like it's the same. Like it gets, a triple top. What is a triple top? It's one of the most basic bearish signs. Something tries to go up to its. Remember how I said stocks always will test previous supports,
the resistance,
previous resistance. So if this is the previous resistance right here where my mouse is, and we get triple topped, meaning we try to break this and get rejected, come back down, try to break it again, get rejected, come back down, try to break it again, get rejected. Now there's one. Now notice, am I uptrending or am I downtrending? Is each of these break higher going a little bit higher? Okay, well now you might actually have a little bit of juice. The difference would be if this was $10 and then this was $9.90 rejection, and then $9.80 rejection, and then it went back down a little bit, pumped back up, $9.75 rejection. Well, now that was a lower high, triple top rejection. That is a bearish sign. On the flip side, you have a triple bottom. Okay, so now it gets shoved down to a $10 support, bounces back up. Gets shoved down to a $10 support, bounces back up. Okay, but then also you got to say, am I uptrending or am I downtrending? Is my 10 bounce, now the next bounce is $10.10. And now the next bounce is $10.40. Okay, that's giving me a positive triple bottom, and now try to enter on one of those bottoms. Try to get the next bottom.
Okay.
So those are how, so it's not going to be like a perfect blueprint. So don't try to like compare it, like hold them up and try to compare it. It's you just have to try to see it takes a little bit of training. You have to kind of just try to see the general direction. So like Apple here, like what some people would call this is like a cup with handle, because you kind of have like a cup shape here, and then here again it's a cup shape here. Here's a little bit of the handle, and if you look at the chart now, it went way up, and so it's not always gonna look perfect. It's not always gonna look pretty. But here's another thing that made me feel good about this Apple is because here, look, we're kind of getting like triple bottoms, but it's uptrend. It's an uptrending triple bottom. So here we're getting shoved down, but these bottoms are becoming higher lows.
Higher.
Exactly. Yeah. So then that also told me, hey, this is looking pretty good here, because since this hot low was higher than this one, I know that this low is going to be might be a little bit higher than this one. So shit, let's get in some shares here and see what happens.
Oh, you gotta plug in your computer to see your low battery.
Oh, that always happens.
I don't want you to
drop like I just dropped.
Yeah. But
that was so cute.
But I love when Ziggy, I loved how you drop some knowledge. Like, always feel free. I like when you guys, other people drop knowledge other than me. So if you have more, do you have anything else to say, Ziggy?
Yeah, please share. I know you've been killing it.
Thank you, guys. No, honestly, just like I said, right now I'm really just trying to, like, even when you do have slight losses, just remember that you're doing what you can. First of all, like I said previously, you should be only playing with money that you can afford to lose, right?
Yes.
So just realize that if you do take a small loss, like the other day, I had to take a $900 loss with Lee, and I had to reposition myself. And so it's all part of a learning experience. So you just got to take the lesson from it and like analyze your own plays. So I have a notebook where I chart on Webull, but I also have a notebook of like when I entered and like different plays I had in my head that I didn't take. And that way, like with the paper trading, it builds your confidence. If you are thinking about doing a play, go do it with your paper trading. And then it starts building confidence. So after I paper traded for like a whole 2 weeks, right? I started jumping in because I realized like, okay, I've been watching these stocks for a while now, and I'm confident that I know kind of what I'm doing. So when I started earning, getting I started with 20%. I would pull out when I would, make 20%. And then I started doing the bigger plays. So something that Jay and JC both taught me is the rollover method. For me, I was spreading myself so thin, a little bit here, a little bit there, and I was only making 2%, 3%, and that's great. But what I found worked for me was pulling all my money, putting it into one good stock, watching it shoot up a little bit, pulling it out, and that's how you start building play money, right? Money to play with, quote unquote house money. You should still be responsible with it because it is still a profit, and you don't want to lose what you just made. But at the same time, you want to be able to, you don't want to just stick with small plays, right? The point of it is you want to be able to make money moves, right? So just start building. The $5 adds up. It really added up for me at the beginning when I was just doing the shares. Right now, I am holding some shares to some smaller spots. But as of right now, I have 5 or 6 calls open on companies that I know are going to bring me, money. So just keep at it. Keep doing what you do. Don't rush. I know you see me making money, and I saw, Jay and JC making money. And that is what should get you, motivated. But don't let what other people are doing distract you from what you have to do, which is create your own signature. You have to create your own pattern of what works best for you. Because, for example, I have 5 kids, right? I can't swing trade because I can't be at a computer at all times, just watching the tickers. I can't do that. So for me, a little bit of a longer extended play works best for me because I can kind of check in and out.
And those longer plays are safer. I just want to keep going, but those longer plays, because you don't have to be right away. It's easier to be right a week, 2 weeks later.
2 weeks later, correct. And through trying, different methods that have been taught, I was like, okay, well, how do I adjust my method that's profitable for me and what I can do? And also a lot of these, before I came to Fruitful, I was a part of another group. But their money is set up differently than my money. They're trading with hundreds and thousands of dollars, and I'm over here with the $2,000 Robinhood account. And I'm like, okay, so how do I make the most of my money and what it could do for me? So the only way to do that is by having skin in the game, right? So either with paper trading or, starting off with, try starting off somewhere on small cap where you can do $150 call and watch I turned my friends $150 into $700 in a week with, PLTR. But I had been watching it for a while. So you just have to try what works best for you. Even with what we teach or what we use, it may not be the best method for everybody.
Hey, Bobby, could you mute your mic? Let's see.
Yeah, I feel you. Because I was, I'm usually looking at 50 MA and 200 over a longer period of time, and I got to get used to looking at the shorter period of time.
Well, that's not okay. So here,
yeah, and sometimes it's the reverse. Sometimes people are so focused on the the month and the 20-day, and just zoom out a little bit more, and you can see a bigger picture. It may look good on the 30-day, it may look good in the 3 month, but if you zoom out to the year or to the 2 years, it's a steady decline in the company, and you can ride a short ride, but maybe that might not be the best company for a longer play. So it really just depends on what kind of companies you're looking at, and then also realize that sectors rotate. So when the EV sector's hot, the real estate sector is crashing, or vice versa. You just have to kind of be mindful of that. And just focus. I'm still new to this. Like I said, I started with Fruitful on September the 30th. I started with, I believe, like 5K, right, Jay? I started with like 5K. I had originally started at 1,500. Through other avenues, grew that to 5. Then joined Fruitful. Not almost doubled it. I got all the way up to 8, and then I pulled like half of my money to do like my kids' Christmas shopping and birthday shopping. And then I was down to like another 2,500, and then I flipped that 25 into the 86 with that work play. But that work play, honestly, I just bought it because it crashed, and I buy on red days. Like red days are my shopping sprees. And then also just be sure to keep a little bit like. So if your total portfolio is $1,000, you should always at least have like a little bit more than half of that, so you can go shopping on days that it is red. You can buy the dips. Try not to, get yourself, stuck into a corner.
That's called over leveraging. Where you're putting, the general rule, the golden rule is 10% of your portfolio in each trade. Okay. With smaller accounts, it's a little bit different. You can give yourself a little bit more, but still, you don't want to be going in with your full account on plays. But keep going, Zig.
Gotcha. Yeah, I wanted to dedicate like a little bit of money. Let's say even $1,000 a month just for like options, trading, and like the rest put into like longer stuff like Square, PayPal.
Exactly. So and then another golden rule is like the 80-20 rule. So 80% of your portfolio should be long-term safe investments. And then with 20%, you can swing trade, day trade, flip options, whatever. But you should that's how you risk management.
And I have a list that I'll be sure. I have to just get to my MacBook, but I do have a list that was shared in one of my other groups that I'll go ahead and share with you guys. But it's you can make money off of dividends. So as long as you're holding in a company right before they're they're going to give their dividends, you will, depending on how many shares you have, you'll get paid just for holding the stock. So that's another way of making passive income within investing. And I'll go ahead and share that once I get to my MacBook, so you guys can start looking into that as well. So, yeah, I don't have much else to say, Jay. I have to go feed my children now.
Okay.
But
thank you, Ziggy.
I'm listening, I'm still here.
I love it.
But thank you very much. I definitely appreciate it.
Yeah, no, we all love it. The more you speak, the better. So I just wanted to touch on a couple things that Ziggy said that I really liked. And so one of the things she said is like, she has kids and she can't day trade. And so the blueprint that I gave her, she had to modify. And that's exactly what this is I'm giving you the blueprint, but you have to mold it to what fits you.
Yeah.
And you have to find, so it's still good because I'm giving you what you need, but then you have to do it on your own, right? I'm not here to give people fish. I give some fish with my calls, right? I'll give swing trades, I'll give options plays, but my main reason to be here is not to be the shot caller, but to be the person who teaches you how to fish and do this on your own. And that's what I've really been happy about, is that a lot of these people that have been working with me for a couple months now are now all doing their own shit and aren't even necessarily asking me questions anymore. They're just posting their gains, and I fucking love it. So, and they're starting to share plays and shit like that. So it's all just over time, this group is just growing to be something really beautiful. And so I wanted to touch on that it's not everybody's the same. You have to find what works with you, but the blueprint is always going to be the same. The fundamentals are always going to be the same. And then she was talking about how she started with shares and then went to options and then had a little bad week with options after having success. and that's normal. And especially when we're new, especially when you're new to options and you get your first big win, you get emotional and you're like, shit, Apple stock went up 3% today, but my option gave me 300%. And you're just like, wow, right? You're flabbergasted. You think like, why would I ever trade shares again? But the issue here is like, it's like, then we have just energetically, we have to be operating from abundance. We can't be operating from lack. And so if we're getting into certain things to try to get rich, get quick, that's not an abundant mindset. That's more of of something from lack. And so if you, and especially when people first make their big win on options, they go directly into another play right away, and then a lot of times give back profit in that second play because it was an emotional play versus being a technical setup play. So
yeah, I've heard you speak about that, like being being kind of centered, and not really kind of, you do your like 2 or 3 plays and you're done, because you don't want to
exactly
like get too full of yourself.
And so this group is more than just trading, right? We're a holistic health and wealth building community. So we're all about mind, body, spirit, health, and wealth. And so on this journey of becoming a trader, it's literally, you're battling your own demons. You're battling to become the greatest version of yourself, because it's those demons and those bad personality traits that you might have that is making you lose money in the market. For
me, it's patience.
Yeah, patience, greed.
Yeah.
There's a lot of things, and even being
insecurity
or being confident, right? Being confident here to buy the Apple shares. You got to be confident here, because more times than not, if you're buying the Apple shares here, you're going to do well. So that whole thing is like knowing when to feel confident and only listening to when you feel 100% confident, not just based off of what you read online, but based off what you did when you did basic charting. Like these basic charting, I mean, like what I'm teaching you guys, this isn't even hard. Like a 10-year-old could do it. Could say, a 10-year-old could say, I'm gonna buy below this line and sell above this line. So obviously it's not as simple as that, but it's not like what I'm teaching you is rocket science. This is more common sense than rocket science. It makes sense to buy below the moving average, right? If when you want to make money, it makes sense to buy cheaper than the average. You're getting a good deal, right? That's why Zig said buy on a red day.
Buy on a red day.
Exactly.
Sell on a green. Yeah.
Exactly.
So another thing for me is that's major, and one of the reasons why I did get into it is because I don't want to be at a job 8 hours a day. So I don't want to be watching my phone for 8 hours a day either. I want to free up that time to go with my children. So you really have to like give yourself like, I'm going to make 1 play today and I'm out, or I'm going to make 2 plays today and I'm out, because it's not just about financial freedom. It's about freeing up your time. So for me, I made that $2,400 play, right, in a day. And then I turned around and lost half of it because I was like, oh, I could just do it. But that should have been my cue to be like, oh, I made enough. I've made the equivalent of what I would have made working for 2 weeks at a job.
Right.
That gives me 2 weeks off to do whatever the hell I want to do. Yeah.
Take 2 weeks off. Take 2 weeks off from the stock market too.
Exactly. So you really don't want to have it consume you, because it's not going anywhere. It's not going anywhere. All these companies are going to be there next week. It's still going to go up. It's still going to go down. And it's just, don't let it consume you to the point where it's like you're freaking out or you're overly invested emotionally. because that's where, you know, you start making the errors. If you don't feel like trading, don't trade. If you don't feel like, if you want to stick with one company and only one company, do that, whatever works for you. But it is about more than just executing moves from like a lack or a FOMO mentality. You really want it to be about liberation, right? You want to liberate, you know, your time, your finances, and basically just allot yourself that couple of minutes in the morning or a couple of minutes in the afternoon, what they call power hour, before close, and make your plays. Because who wants to sit there for the rest of the day while shit goes up and down, having, you know, pulling their hair out, worrying? Like, okay, just focus on the morning and focus on the afternoon. So for me personally, I wake up at 4 o'clock every morning, not because I want to, but because my kids are annoying. And they're up, right? They're up. So I get up and I start reading articles. What's hot? What's going on? Who's filing for an IPO? Who's merging with who? And then I just start taking notes and I watch. And then when the market opens, that first hour, I can kind of tell which way it's going, if I'm going to make any plays or not. And then I walk away. I walk away from my phone. I check in maybe once or twice throughout the day. And then right before market closes, I'm like, okay, what do I need to do? Where do I need to sell? What's been going on, you know, since I've been gone? Total, maybe 2 hours spent on work per day, if that. But if it's not fun, I don't want to do it. I've always been the type of person that if it ain't fun or if it doesn't feel good, I don't want to be there. So don't rush into it, because it may be you know, next week that picks a play that's going to shoot up, because you don't know what the stock market's going to do. So just keep at it, fine tune what you got, and, you know, it'll start working.
Okay.
And don't feel, just because you guys are beginners, don't feel like you can't recommend plays or ask stupid questions. Like, there's no stupid questions, and don't feel like just because you just got in here that you can't say, hey, look at this company, it's below the MA and it has a lot of good news, and I checked their financials and they don't have a lot of debt. Like, share it with us, because the more of us,
it could really be a gem.
Exactly.
It could really be a gem.
Exactly, because you know, Ziggy first got in here, and you know, at first I was training her. I didn't know how good she was or if her plays were going to work, but then I saw that they were, and then I started going in with them with her, and we were making money. So it's like, just be, you know, you have to trust, you know, if you're applying what we're teaching you, then you're going to be all right.
Don't doubt yourself. Yeah, exactly. Don't doubt yourself, because as long as you are applying the blueprint, it may not hit right like when you think it's going to hit, but it'll hit.
Yeah, that's one of the things that, like, I usually pick a good company, but pick a horrible entry point.
Yeah, and it's, if you knew what you knew now, you probably wouldn't have made those bad entry points. And so don't, and it's so important what Zig said. Like, if you're not having fun doing this, you need to take a break and paper trade. And if you're fucking up with the options, go back to trading shares. Like, trading the shares and being successful trading the shares is going to make you very, very successful trading the options. That's why I tell everybody to paper trade first if you want. But I always recommend, hey, throw like a couple $100 in Robinhood, buy a couple stocks so you can get those butterflies out the way. But then paper trade, because if you can do it in the paper trade, you can do it in real life. And this market's not going anywhere. It's the day trading that you know, when I day trade, the opportunities to make the money are there every day. That's why people day trade, but it takes a lot of skill. I am by no means an expert, but I've gotten to the point where I can at least do it at a decent level, where now, and I've seen the benefits of the knowledge I've gained by doing the day trading apply to everything else. And that's what I've been teaching you guys is you know, the knowledge I've gained through this is, you know, I'm taking a step back a little bit from the day trading and applying all these skills to the swing trades. And that's why, like, when I sent the Nikola trade 2 weeks ago, it made 100% on the option. But then, then I took the profit and I moved on. Unfortunately, one of the members in our group kept trying to short it, even though it was below the MA, and then lost some of that money. So you have to just know, like, why would you short something when it's, even if it's falling down, now it's fallen a shit ton below and it's already below the MA, it's more likely to pop than drop, even if it's just a small pop. So you want to wait, and then you could short the pop, but the pop is always going to be there. Nothing goes up in a straight line. Nothing falls down in a straight line. So
So speaking of that, like, so when I go and I'm looking at, like, right now I'm in my Fidelity, like the Active Trader Pro, right? So I can see the, like the 5-minute chart. Do you ever look at like the other stuff, like the Bollinger Band, Ichimoto clouds, or any of that? Or are you just strictly running with the MA?
There's so much shit that you can use that if you used all of it, it would overwhelm you. And so the same thing, like, okay, there's some, like,
for some. Oh, sorry.
No, you
for some, I do use the VWAP. Sorry, guys. I have horrible signal.
Okay, so when she gets better signal, but it's like, okay, the metaphor in trading translates in everything in life, and that's why this is a holistic community, because to be the best trader, you also need to be striving to be your best mind, body, spirit, and then it will translate into your trading. Like if you're so if you're eating healthy, you're going to bed on time, you're doing things that make you feel good and that make your body feel good, well, of course you're going to be a better trader. You're going to be more centered, you're going to be, you're going to make better decisions and everything. So just like how there's so many indicators out there that you can use, but what do the, when you watch the UFC, what are these guys really doing? They're throwing jabs, they're throwing crosses, and then they're throwing leg kicks. There's so many fancy punches and kicks you can throw, but what's actually knocking people out? It's the jabs and the crosses. It's the kicks. It's for someone to get knocked out on a 360 Superman punch, like that happens like very rare, right?
Rarely.
So that's the same thing, like with the analytics, like the moving averages, the RSI, that's your jab, that's your cross. That's really all you need. But now with all these other indicators, if you learn how to use them to your benefit and make your jab and your cross even better, then by all means go for it. But personally, that one I have never heard of. The Ekimoto or whatever, I've never heard of that.
Yeah, I remember reading about that a while, like years ago, to kind of give you like a range of stuff.
Yeah, and definitely the using bots and other things in computer programs, which I'm going to implement into the server. Actually, I'm going to implement some bots and some scanners into our server, and that all is going to be very, very helpful. But then again, we just have to then apply it to our basics, then take all that extra stuff, all that extra information that we're getting, but then still apply it to our basics in the original blueprint. So it's really, use whatever indicators work, but the main ones you need are the ones that I'm giving you now: the RSI, the moving averages, looking at the volume. Is there a lot of volume today? Knowing what the average, any stock you look up, it will tell you the average volume. Okay. And on days that the volume is high, there's a lot of volatility in the stock, whether up or down. So just knowing, like, okay, if there's a lot of volume today, something's going on. it's either going to go up a lot or it's either going to go down a lot. You know, just using those other information that you're getting to then help you as a trader.
Yeah, I feel you.
Can I ask something real quick?
I feel you.
Yeah, go ahead, Is.
I was wondering how to do a $20 option call possible, or something under 100. Because last time I tried, it was like 5 contracts, and it ended up being like a $250 option call or something.
So you have to remember, options is the right to buy or sell 100 shares. And so you multiply the price by 100 to get the cost. Is that your question? So when it says 267, this option isn't worth $2.67. It's worth $267 because an option is giving you the right to control 100 shares. So that's why if Apple goes up 3%, your option is up 300% because you're actually controlling 100 shares with each of those contracts. Is that your question?
Yeah, and there's no way to modify the 100 shares.
It's always gonna. Yeah. So whatever you type in, you put one contract. It's always gonna multiply whatever that price is by 100. That's just the way. That's just like the unit that options trade in. Options trade in a unit of 100 shares in a contract. That's just how it is. But the price reflects only one share, essentially. But when it goes to purchasing and selling it, you multiply it by 100.
Okay. And,
that was your question. That was your question, right?
What was that?
That was your question, right?
Yeah, pretty much.
Okay. Yeah. So there's no like limit. Like you can buy. You have to buy at least one contract. You can't buy like half a contract, like the way you can buy half a share. But yeah, I mean the lowest you can purchase is one contract. But when it says these costs $1.75, it's really $175 to purchase the whole contract. That's just the way it is. You have to just
Makes sense.
learn it that way.
What about like I don't know. I think I might have seen somebody get like a $20 option call. Could it have been like a penny stock lead?
Okay, so yeah, that's what Zig was saying is like you can do options on a small company or a company that doesn't move a lot, and the options are going to be very cheap. So like for example, if we go to silver, because silver doesn't move crazy, it does trend, silver trended up, but it takes, 5 years for this move. It trades slow. So when you go to the options chain on silver, you're finding these call contracts for 30 cents. Yeah, this is $32. When you go to check this out, this is only $32. So for those of you that, are new to options, these are the type of options that you want to mess with. Like you go to AMC, you'll also see that these options are super cheap. Look at these options. This is a $13 for this $4 call. So yes, by all means, when you're new to options, you should be looking for companies like this. That's okay. I'm learning options with only. I'm learning options with only like $10. So even if I lose all of this, you're learning. And in the market, they, so I haven't necessarily. Yo, what's up, Bobby? Could you mute your mic, please? I'm gonna have to mute him again. But so like you learn in the market. There's like this wise words. It's like you gotta pay attention, and in the market, you gotta pay the market tuition to learn. Like you're paying the market tuition by losing money, by giving money to the market. You're learning, and so if you ever lose money in the market, You have to make sure it ends up being a tuition expense. You're paying, but you're learning. You're not going to make these mistakes again. You know, each time you lose, it's a learning opportunity. You never make the same mistake again. Or you keep making the same mistake. Well, at some point, you got to realize this is the wrong way, this is the wrong place to trade, or my mindset is the wrong mindset, or my energy today. Anytime I'm stressed out, or maybe I had an argument with my girlfriend, so it's going to make me trigger and do stupid trades. Like, you have to figure out, like, you got to watch yourself and kind of forgot.
Those dividend charts in long-term investing, if anyone wants to take a look.
For sure. Yeah, and so people can understand dividends. Dividends get either paid per month or per quarter. So this doesn't mean that you get 4% per quarter. This means you get 4% on the year. And so however often they pay it, some companies pay it every month. So you divide this by 12 on the dividend date. Most companies pay every 4 months. So then you get paid a quarter of this every 3 months. And I'll definitely go over like strategies. Like O is really good. Some of these are really good for dividends, because a lot of times a lot of people want to get in for that dividend, and then as soon as they get the dividend on the X dividend date, they sell. So a lot of times companies will pump and dump around dividend date. So there's certain strategies to implement that I'll teach you guys so that you don't get caught in getting
the pump and dump.
Yeah, exactly. Like getting the dividend, but shit, now my shares are down 3%. I just lost money. So you don't want that to happen. But for sure, just one more thing I wanted to go over before we can kind of wrap up and just answer any other questions, or if anybody else has anything to say, is you were asking, like, sometimes shit falls more below the moving average. How do I know when to enter that? So this is when Ziggy was talking to me about the golden cross. And the golden cross is anytime a shorter term moving average correlates with a longer term moving average. And so in this sense, we're using the 20-day is the short term and the 50-day is the long term. So then anytime it's a good entry on both of those charts, that's what they would consider a golden cross. And the golden cross is when it goes from below the 50 and below the 20 and then goes to cross them. So that's what they call the golden cross. And if you entered at that golden cross, look what happened. So that's why they call it the golden cross, because it is a golden cross. But then look at over here, these didn't touch the 50 or go below. So then sometimes if you slap up a chart and the 50 is not really working, you got to see, maybe I got to do like the 40 or the 30 or the 35 or some shit. So just kind of play around with it. That's what I'm saying. It's the blueprint. It's the blueprint, but you got to edit it a little bit. So just kind of play around. And to edit it, you would just go to press this button and go to indicators, go to more, and then you can edit them. And if you don't know how to do that, I can help you. But yeah, so that is what you're using. A longer term one. It's gonna give you, if you like, so for Tesla, if you were just gonna say, okay, I'm gonna play the touch, these touches were good for you. Anytime it touched and crossed barely under the 50, these were really good entries. So, but the 20-day is the 20-day in general won't do you wrong, So but you got to use, it's you can't just use one thing. Then you're a little bit too blind. You got to use multiple things. If I'm
so when you see something like that, so that golden cross, is that, or even when you're touching, right? You're looking now. You're saying, okay, this is a good investment. So how do you know then how long to go?
So then it's the same thing. So like anytime it's above that 20-day significantly, you got to sell.
Yes. So it's going to shoot up, right? And that's cool. It's not going to shoot up forever. So if it gets too high above, the 20-day MA, or at that point, that's when you look at other things so that you don't get stuck losing profit.
Mm-hmm.
Yeah.
No, but like when when you see it coming down, you're like, okay, like now it's potentially in your buy zone. So if you're looking for those options, right? How do you know exactly how far out to go? If you're looking at 2 weeks,
so
you're looking at a 2 month.
You just kind of have to interpret the data. So the chart is going to give you the months at the bottom, right? So look at these bull runs usually last like a month, okay? Like from here, the start of this bull run to where it then ended, that's almost 2 months, okay? And then the start of this one to kind of where it ended, this one was shorter. This one was only like a month. So you at least would want to give yourself, 1 to 2 months.
Okay. Gotcha.
And when you're getting in on a long indicator like the 50-day moving average, you can feel very good about a long-term investment too. These are things that we're waiting for, and you also can look at the longer. So instead of looking at the daily chart, I'm gonna go to the weekly chart, which is gonna be even longer, and the moving averages are gonna be even lower, and say, hey, I'm gonna wait. I want to do a long-term investment for like 5 years on Tesla or 10 years on Tesla, where I'm just gonna enter and never look at it again for another 10 years because I know Tesla's gonna go up, or I know Apple's gonna go up. Well, shit, then I'm gonna go to the weekly and wait for it to touch those weekly moving averages, the 20-day, and then enter. And then I'm feeling really, really good about my entry long-term, because long-term investing is the safest way to go, just in general. Buying good companies and holding them, it's very hard to lose money. But that's also if you have a portfolio, a long-term portfolio, and you have some stocks that are doing really well, but on others you're down, you got to get rid of those losers, because those losers you could have had in your winners. So like, let's say I held a stock for 6 months and I'm down 5 or 10%. Why are you still holding it? You got to get rid of it. There's no reason to hold that shit. There's 6 months somewhere else could have given you 200%. So why are you still holding a negative 10% after 6 months? So if you do make those investments, then you got to learn which ones you got to get rid of. Okay, sorry, I cut out. What were you guys saying? Can you guys hear me? Hold up. I'm gonna refresh. Hold up. Okay, can you guys hear me?
Yeah.
Okay.
So yeah, I was just gonna ask you a quick question about knowing when to sell things, because I held IDEX for like 6 months and I got frustrated and I sold when it hit $1, and a week later it went above my original price count. Yeah, and I got so basically I lost like $900 on that, and I could have sold for a huge fucking profit because I held it since June.
Yeah, I held it since June too.
Oh man, fuck that thing. But yeah, right now I've been holding Salem, like these online education stocks. I've been holding Salem and Boxel. since like August, and I'm down about like 50, $60. And the only reason I'm hesitant on cutting these is because, like, what if the shit pops again? You know what I mean? So how do I know when to sell?
Well, how much percent are you down? That's what matters.
I have not calculated that yet. Give me a second.
You have to know your exact percentage, because on my long-term investments, I have like a 5% stop loss, because like I said, if you're waiting for a 50 MA touch, you're like, the chances of it going lower is so low. Like you should be making money like after you buy your long-term investment, and give it like a month. But if you're not making money within that first month, then you didn't have a good entry. So yeah, you got to reevaluate your entry.
Okay, because right now I'm down about 25%.
Yeah, that's way too much.
That's too much. Like a long-term,
You could, yeah.
A long-term investment should be like a 5% stop loss, because these are companies you want to hold for a long time. So if it's already giving you negative gains, you got to get out, because you got out at 5%, you would have, now you wouldn't be down 25. And that's also telling you that that's probably not a good company to hold long-term.
Got you. Okay, I'll just toss this shirt real quick.
I mean, bro, if you let FOMO affect you, it would kill you in this game. You can't let FOMO, like, okay, you sold IDEX for a loss, and then if you would have held it, you would have made money. Like, but did you have a plan for that trade before you went into it? Like, did you have an idea for your stop loss and for your take profit? Because if you honored those things and you still like the company, then you just reposition. Your stop loss hits, and then you wait a little bit. Don't enter the next day. Like, give it a little bit of time, a couple weeks to play out. This is a long-term investment or a longer-term swing trade, so you don't need to rush into it right away. That's why you have to have a plan. You have to have a plan. Am I doing a short term? Am I doing a medium term? Am I doing a long term? Because each of those different trades, you're going to be it's the same concepts, but you're looking at different things. My long-term investment, I'm looking at the daily and the weekly chart, and I'm using that 50-day or a longer moving average. Okay, but if I'm doing a short-term swing trade, I'm looking at maybe the 1 hour chart, the 4 hour chart, the daily chart. That's a swing trade. You're not using the hourly chart necessarily for a long-term investment. It's not gonna tell you the things that you need to know. Does that kind of answer your question a little bit?
Yeah, because the IDEX trade I made was like the first trade I ever made, so it was completely retarded. It was a really bad move. And I put way too much money for someone who doesn't know what they're doing. So, I mean, I learned through that, right?
Yeah, I mean, so then when you sold that IDEX, what percent was it down?
About 65% down, because I held it for 6 months and it just kept playing around in the just kept staying around the range of $1, and I couldn't average down because the brokerage I was using at the time charged like freaking $5 for fees each way, and I didn't want to pay that.
Yeah,
I've been through like 3 or 4 different brokerages because all the options in Canada suck. I finally found someone that's like half good.
But that answers the question right there, though. Like, you were down 65% when you sold. If you honored the 5% stop loss on long-term investments, or 10%, to try to get, and it's not necessarily you have to get rid of that company and never invest in it again. That's more of like a reposition thing. Like, shit, my long-term investment is now down 5% a month later. Like, you obviously mistimed you didn't have that good of an entry. So then just figure out why you didn't have a good entry. Maybe it's something as simple as, hey, I didn't look at the weekly chart because I was doing a long-term investment. I should have looked at the weekly chart instead of just the daily chart, or I should have used a 50-day moving average too, not just the 20. So and then if you like that company, then you reposition, because it was down 65%. Well, you stop lossed out at the 5%, and then you rebought the bottom when it was negative 60% and then rode it all the way back up to the gains. So if there's a company like that you like, that's how you have to attack it. Honor the stop loss, but then just reposition, but give it a little bit of time, but then reposition it, and then also use those charts to try to figure out an answer for why it wasn't. And if you can't figure it out, to ask me, and I'll most likely be able to tell you why it wasn't a good entry yet. I'm not saying it's a bad stock. You just have to have a good entry.
Yeah, I got you. I just had I had limit orders set on the way up, and they didn't trigger, and then on the way down they triggered, and I kind of got stuck with it. That's what ended up happening.
Yeah, I mean it's unfortunate, and that's just the way the stock market is for beginners when you don't really know what you're doing, and that's why there's so many Discord communities like mine that are becoming popular now, because we're actually trying to, my goal is to give you all of my mistakes. Like, my goal is to tell you and warn you of all the mistakes that I've made so that you don't make them, and what I've learned. But at the same time, sometimes you have to make your own mistakes to pay attention to them. Similar to why I made a fee for this group, because at first I wanted to make this free for everybody, but then I started getting people to join that I would work with for like 3 hours, but then never hit me up again. And then so now I'm just like wasted time and energy training a person that didn't really care. So that's why I say, like, you got to pay attention. I made this $11 a month, so you guys are paying me, so you're paying attention to what I'm trying to teach you, and you actually take it to heart. And it's the same thing with the market. Like, if you lose that money, you got to take it to heart and let it be a positive thing. Let it be a learning experience. And then in the future, when your stop losses hit, that's not a loss. So like on this trade that I sent you guys on the American Airlines on the option play, this was one of the first times I ever sent an option that stopped out. You guys see, I ended up stopping out at about 8 to 11%. But that doesn't mean that this is a loss, because how many people lose way more than this with options? And so because of my short-term swing trade that I was trying to send you guys, because it wasn't panning out the way I wanted it to, I just got out at you see it was up a little bit at first. At the most I went up on this was about 15%. At one point, this was up, the right after I sent it, the most it went up was about 15%. You guys could have sold. I did not sold because I thought there would be more. I got a little bit greedy. I could have taken that 10% right there, that 15%. But then I ended up taking a little bit of loss on it. But it's because it was not really playing. I wanted this trade to work out as soon as I entered it and as soon as I sent it to you guys. Because it didn't work out in that time frame that I had, this was more of a short-term swing trade. This was supposed to, make some money today and at least be up, but because it didn't, it kind of stayed at where it was. It was down a little bit, up a little bit, around the same. I just said, I'm going to get out of it. And this is still a win, though. It's not a loss. Like, yes, I lost a little bit of money on this, but is it really a loss if you're honoring your stop loss and implementing these risk management strategies? No, it is not a loss, because
you're fine-tuning the
exactly
technique.
You are building good habits. You are building, because now you're getting practice at cutting these losers early so that you never have a negative 50% loss or a negative 90% loss, because I have had negative 90% losses on my options when I first traded options. So I want none of this, because it's a very terrible experience, especially at that time. I was using money that I couldn't afford to lose. Okay, so I was operating in these trades from a place of lack, and then I didn't honor the stop losses, and I could have gotten out at 10% loss, and I watched it go all the way to 90% because of being stubborn and being arrogant and hard-headed and whatever. And so this isn't a loss. You know, this was that. We lost this trade that I sent you guys. Lost 8 to 5. 5 to 10%. You might have lost on this, and I feel bad, but at the same time, this is just the way it is. Every single trade I send is gonna have a stop loss and is gonna have a take profit. I mean, when people send trades, you see a lot of these trading communities. None of them are sending take profit and stop losses, and that's something that I actually have an issue with. You go into all these other servers, 99% of them do not give you this shit, and so I'm actually, and especially you have to understand the long-term investing, that's safe. Anything that we throw in here is safe to buy long-term at the right entry points. These options and swing trades, we have to remember, this is kind of like this is a little bit, now we're entering a little bit of like gambling. But because we're using all of these indicators and we're charting everything and we're looking at the RSI and we're waiting for a good entry, and I'm putting stop losses on them, this is the way you need to trade. If you're gonna make options trades and you're gonna make swing trades, which is borderline gambling, you gotta have these strategies implemented. Otherwise, you're gonna end up losing way more than you want to lose, and it's gonna make you very discouraged, and you might never want to trade stocks again. So that's why you really gotta honor these stop losses. And in this case, American Airlines went down today a little bit and then went up and went down. So there's opportunities you could have gotten out break even. So if you're doing a more short-term trade and you think it's gonna pan out like today or the next day, but it's not panning out in your time frame, now you need to reevaluate. The best thing you can do is get out break even. The second best thing you can do is get out with less than a 10% loss, because less than a 10% loss is really, not going to affect us. It's obviously still a loss, but it's not going to necessarily ruin your day. A negative 50% loss is going to ruin your day. It's going to ruin your week. So that's why the first thing I'm going to preach is risk management. You got to learn risk management, because this game is really cold. It's cold-blooded. The stock market does not give a fuck about you, and the whales surely don't give a fuck about you. The people controlling the market. So there's market makers, there's market takers. We are not market makers. We do not have hundreds of billions to actually move the market. Okay, so we're market takers. We got to take what we're given. We got to take our profit when it's there, and we got to cut our stop losses. Those are what you need to do. You have to be cold. You have to almost turn cold-blooded in a sense where you're gonna be like pure technical. Like there's two things that move the market. The first thing that's gonna move the market is, let me pull this up. So two things move market. The number one thing that moves the market is news, hype, and fear. The second thing that moves the market is technical analysis, which is the MA, RSI, etc. Okay? So the reason I put this number one is because this trumps all. No matter what, no matter how much technical analysis you do, it's not going to be applicable if there's an extreme amount of news, hype, or fear. Just like how the coronavirus crashed the stock market. The technical analysis, that made the technical analysis look stupid because shit just kept dumping. It's like RSI was almost going negative. Like you never see, you see this, you get a big stock market correction like once every decade, right? So that's when this news, fear, hype, that's why it's number one. But then at the end of the day, it's still always going to be technical analysis. But then if you can get news and technical analysis working on your side, like, hey, I'm getting in below the MA at a low RSI and there's good news coming out and a lot of hype, well, shit, you're setting yourself up for a good trade. So these are the things you need to implement. You can't just, and that's the reason why Ali lost money, because he was buying a call above the moving average, and he was just hoping on good news now to make him money instead of, but it's almost like good news is almost like wishing on a star. Like you're wishing on a star at that point versus having a fundamental base of like this is actually going up.
And even then, good news still causes the market to go down sometimes.
Exactly. So but I thought that this has been a very good training session for it so far, and I actually recorded the whole thing, so I'm going to upload it. Everybody else is going to be able to watch it, but I'm definitely here to continue to talk. I'm just kind of chilling and answer any other questions. But for those of you that have been in here for a while, just want to say thank you for the support and for showing up. And I hope you learned something. And just let me know if you have any questions or you need to reach out to me. You're always welcome to.
Thank you very much. I really, really appreciate that.
Of course, of course.